days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
New position opened, ladies and gentlemen, for Japanese yen. 104.350. Okay, it's short position, so we sold short.
I'm about to expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh.
But to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl, Superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CTE in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in the laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers. Yeah. Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of...
Profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years. And I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like
feathering
me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that is this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Live from my home in New Jersey, streaming on YouTube. It is Thanksgiving Eve, Wednesday, November 25th, 2020. And our focus right now is going to be Fed minutes. This is from the November 4th, 5th policy meeting. And we will be looking for any signs of changes when it comes to bond purchases. But got to say, there isn't much action expected off of the news that we get from the Fed today. But as soon as they start crossing the Bloomberg terminal, we will bring them to you live, do some market analysis as well. In the meantime, let's get a check on the trading day. We got a lot going around, including a Bloomberg exclusive with the Treasury Secretary, Steven Mnuchin. So, Charlie, a lot to digest on this Wednesday.
Indeed, and let's begin there. Treasury Secretary Steven Mnuchin saying he has maintained close coordination with Fed Chair Jay Powell throughout the economic downturn sparked by the pandemic, and saying the central bank was aware in advance that he would bring an end to emergency facilities. The rotation out of tech shares and into cyclicals sparked by promising vaccine news reversed today as investors cast a wary eye on a batch of data that suggests a possible slowdown in economic growth. We've got the S&P retreating from yesterday's record, down now by 6 points, a drop there of just about 0.2%. The Dow is down 155, lower by 0.5. NASDAQ is up 46. That is a gain of 0.4%, while the Russell 2000 index, what a November, by the way, down now by 0.3%. 10-year up 2/32. 10-year yield 0.87%. Gold down 0.1%. 18.05 the ounce, and West Texas Intermediate crude up 2.5%. 46.05 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
What a November, what an October, what a September, Charlie Pellet. What a year it's been. All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Do want to set the Business Week agenda. Keep in mind, Bloomberg Business Week and our Fed focus at this hour more, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions that they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. And the Fed definitely in focus because we do have those Fed minutes crossing the Bloomberg. Again, it's from that November meeting. Let's set the Business Week agenda with our own Michael McKee, his international economics and policy correspondent at Bloomberg News, and he's joining us on the phone right now. You are on the phone, right?
I am on the phone.
Just checking because I know you are all over. You're a busy guy. So Fed minutes, first of all, were expectations high here or not necessarily?
Expectations are not high. The meeting was 3 weeks ago, and we're still 3 weeks away from the next meeting. And so circumstances can and do change a lot. Certainly, we've seen a pickup in the COVID cases. At the last meeting, the Fed did not know that the Treasury Department was going to pull the funding for their special lending programs. At the last meeting there was still, shall we say, a little bit of uncertainty about who won the presidential election. So there's not a whole lot in there. The first headlines that we get, and of course the Fed changed the way they release the minutes because of the pandemic. We now don't get them under embargo. The headlines come out as the reporters read them. And they're saying that circumstances could shift to warrant bond buying changes and that they should enhance their QE guidance fairly soon. So maybe that means either they announce a change in December or they announce that they might announce a change. We don't really know yet.
Well, it seems like more of the same, right, Mike? I mean, listen, the Fed is constantly watching what's going on in the economy, the current situation, and can say something, today, but it could certainly change tomorrow based on what's going on in the economy.
And we have to keep in mind that the Fed can't do a whole lot at this point. They can buy more QE and push down on the long end of the curve, but at 75 to 85 basis points, you're not really having much of an impact if you're pushing 10s lower. And they can, do some other things to keep interest rates down, but they can't really do much else at this point. And now they're having even some of the lending taken away. So this matters, in a sense, to people on bond trading desks because they have to absorb this. Yeah. But to the general public, it isn't going to make really any difference at all.
All right. So what does make a difference on this Wednesday, Thanksgiving Eve, Mike? I think in a day where our Bloomberg News team caught up with the U.S. Treasury Secretary in an exclusive. Anything out of that? Talked a lot about his relationship with Jay Powell of the Fed.
Yeah, there's been a lot of speculation that Mnuchin's decision to claw back money from the Fed lending programs and end them on December 31st was designed to make it more difficult for the incoming Biden administration to deal with the pandemic. And it looks like Mnuchin is pushing back a little bit on that, trying to fix his reputation some, and saying, that we didn't have a choice, that Congress meant us to end this on December 31st, so we had to do it. There is some dispute about that, but that is the Treasury Secretary's reading. And, of course, he did talk, to Jay Powell about it. We knew that because the Fed statement came out minutes after the Treasury statement. So the Fed was aware of this.
Yeah.
They have gotten along fine, and I don't think there's some sort of irreparable major breach between Fed and Treasury, but obviously with Janet Yellen coming in at Treasury, they'll grow even closer.
Well, and yeah, exactly, right? And she's going to be someone who certainly understands the situation. And you do wonder, Janet Yellen hits the ground running. Will she have everything in place that she needs to do what she needs to do to help out the economy from a Treasury's perspective quickly?
No, she won't, because these lending programs, the money, Mnuchin says he's going to put the money that he does get back from the Fed, which should be about $260 billion, back into the general fund, which means it has to be appropriated by Congress again. So the Biden administration would have to go to Congress and ask for a new version of the CARES Act, some sort of stimulus program. And who knows, given Mitch McConnell, whether they would get it or not. So she may be a little bit handicapped. The issue is whether they need it. We don't know yet.
Right, exactly. Well, you tell me, Mike, you parse through all of the economic statistics that we get. We got those weekly jobless claims numbers that we watch typically on a Thursday, but of course we got them Wednesday today because of the Thanksgiving holiday. What do they continue to tell us about the U.S. labor market?
Well, the jobless claims tell us the labor market is starting to hurt again, which is the story that we anecdotally have observed with states starting to close bars and restaurants early, gyms and theaters and things. The people who work in those businesses are now unemployed. So we expected the jobless claims numbers to go up. but not as fast or as far as they have. The other numbers we got today weren't bad. Durable goods orders up 1.3%. And so the manufacturing side of the economy is still going okay, but the consumer side might start to slow if people continue to lose their jobs and therefore paychecks.
Well, talk to me about the income and spending numbers, what your take was on those as well.
Well, the income numbers are a disappointment because obviously you can't spend if you don't have income. And so that's a little bit of a scary number. The spending numbers, we sort of expected something of a pullback. It was lower than the prior month, a little bit better than expectations. But the fact that people were still spending is relatively good news. And the question is, do they continue that this month? And what does the holiday season shopping look like?
Right, especially since a lot of the support systems that we know start to wrap up at the end of the year. Michael McKee, before you go, what's your favorite pie for Thanksgiving? I know we've talked about this in the past.
I'm an old English traditionalist, and I like mince pie, but hardly anybody likes that.
God, where do you even find it? Listen, have a great... All right. Fair enough. Have a great and safe Thanksgiving. Michael McKee, always appreciate it. International economics and policy correspondent at Bloomberg News. All right, coming up, we've got a jam-packed show on this Wednesday. We're going to check in with the CEO at Medable. It's a platform that connects patient sites and vaccine clinical trial teams. So we'll talk to her about what she is seeing and what kind of work is going on there. Favorite guest of mine, NYU Stern School of Business professor Scott Galloway. He's written several books. He's got a new book, Post-Corona: From Crisis to Opportunity. I cannot wait to check in with him. Also, we've got a story about Google's deep pockets. We've got another one about 16 days to stave off a nuclear arms race. And if that didn't wake you up, how about our most read story on the Bloomberg? It's about a flat bonus pool on Wall Street. So wait, what? So we'll get to that. Then we've got Greg Greifeld. He's the head of credit over at Runway Growth Capital. So we'll talk about financing for late-stage growth companies and really the use of debt in all of that. And we're going to wrap up. I'm surrounded by wine bottles, so we're going to wrap up with some wine on this Thanksgiving Eve. We'll talk about that with the sales brand ambassador of 1821 Fine Wine and Spirits. Quick check on the bite of the day. One number that tells us a lot. It's 10,000. IBM planning to cut about 10,000 jobs in Europe. It's all as a move to cut costs as its slow growth services unit and get ready for a spinoff. All right, right now, let's get a check on world and national news. For that, it's over to Nancy Lyons. Hey, Nance.
Hey, Carol. Well, we are standing by for President-elect Joe Biden to give a Thanksgiving address. He's expected to ask Americans to continue following COVID-19 guidelines through the holiday. Well, Rudy Giuliani is in Pennsylvania this afternoon, arguing before a legislative committee the election in that state was a sham. He singled out Philadelphia and Allegheny County surrounding Pittsburgh. President Trump had intended to join Giuliani, but canceled when one of his aides tested positive for coronavirus. Well, despite warnings from the CDC that Americans need to stay home this Thanksgiving, airlines say they're seeing an increase in air traffic. Daily numbers are up 16% from last week, according to the Transportation Security Administration, but it's unclear if the boost will be enough to carry the airlines through to the end of the pandemic, which may not arrive until next summer. George Ferguson is an airline analyst for Bloomberg Intelligence.
We think lots of carriers have put a decent amount of cash on their balance sheet to make it into summer 2021. If summer 2021 isn't good, you're going to see a lot more failures, and that obviously leads to layoffs and things like that.
The International Air Transport Association predicts airlines will need another $80 billion in government support. The annual Macy's Thanksgiving Day Parade in New York City will be different this year because of the pandemic. Executive producer Susan Tercero says TV viewers will not see crowds.
But they will see things that are very familiar to them, like the floats and the balloons, and those performances and everything passing in front of Macy's Herald Square at 34th Street.
And participants will be wearing masks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, appreciate that update. Carol Massler, along with Charlie Pellet here. Have you ever been in the parade? Somehow I feel like you would have been.
I have watched the parade very close up over the years, and what an experience it is. But good luck trying to find a bathroom.
Yeah, exactly. Plan ahead, everybody. All right, let's talk about some of the virus stories that we're seeing on the terminal today. Charlie, John Tozzi putting out a story. A growing number of hospitals around the U.S., they have canceled or delayed some planned medical procedures. Basically, it's all about preservation for staff of beds as we continue to see those surging COVID-19 numbers.
Indeed. The conditions, according to John's story, are especially acute in the Midwest and West, from Illinois to Idaho. Health systems limiting non-emergency surgeries as the pandemic strain on personnel grows. All of Wisconsin's major hospital systems said to be postponing, just as an example, some non-emergency care. Hospitals also working with regulators to add around 1,400 beds statewide. And it's an issue. Number one, are these beds that could be going to COVID patients? Issue number two, do you want to be in a hospital for elective surgery in the current environment?
Yeah, exactly. But, delaying some of these, either routine procedures or important operations, whether it's replacing joints or removing tumors, obviously can have an impact on patients. And this is why I think, Charlie, you and I talk about it. It's the domino effect. More cases, more hospitalizations, strains on our healthcare system so that routine procedures are squeezed out. We're stressing and maxing out a healthcare system and individuals and professionals who are already pretty exhausted, still kind of reeling from the first wave. And so this is why we talk about, this is why the medical experts we talk to with, this is why the folks at Johns Hopkins talk to us about, social distancing, wear masks, do everything to protect your community.
And stay out of the hospital.
Yeah, exactly. No doubt about it. All right, folks. That's just one of the headlines that we are dealing with when it comes to COVID-19. Charlie Pellet, thank you so much. Appreciate it. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Federal Reserve officials discuss providing more guidance on their bond buying strategy during their November 4th, 5th policy meeting. According to meeting minutes published today by the Fed, quote, many participants judge that the committee might want to enhance its guidance for asset purchases fairly soon. The rotation out of technology shares and into cyclicals, sparked by promising vaccine news, reversed today as investors cast a wary eye on a batch of data that suggests a possible slowdown in economic growth. S&P retreating from a record, Dow Jones Industrial Average falling back below 30,000. Here's where we stand. The Dow is now lower by 192 points, a drop of 0.6%. S&P down 10, a drop there of 0.3%. NASDAQ up 36, a gain there of 0.3%. NASDAQ 100 index up by 0.4%, and the Russell 2000 is down 0.5%. 10-year yield 0.86%. We've got gold, little change, down 28 cents the ounce at $18.07. West Texas Intermediate crude surging 2%, now at $45.83 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. So Charlie and I touched upon some of the virus heads, Nancy Lyons. We know infection rates are accelerating in the Southwest and the Rocky Mountain West after sweeping through states in the Midwest. We talked about a growing number of hospitals canceling or delaying some planned medical procedures to preserve staff and beds. The death toll in U.S. nursing homes and long-term care facilities topping 100,000. And meantime, you've got U.S. airline traffic rising as some Americans traveled for Thanksgiving despite tons and tons of warnings from American health officials. Cases right now passing 59.8 million, deaths topping 1.4 million. So let's talk about the virus. Our daily check today with Dr. Michelle Longmire, CEO at Medable. It's a platform connecting patient sites and clinical trial teams, and she joins us on the phone in Palo Alto. Dr. Longmire, so nice to have you here with us. First of all, tell us a little bit about what you are seeing on the ground out there on the West Coast.
Sure. Well, thank you so much for having me today. I think everyone is talking about the risk mitigation strategies that are really needed for the holiday. Of course, everyone loves Thanksgiving. It's really a quintessential family holiday in the United States. And unfortunately this year, the best thing to do is to really, take the safety measures into consideration. And unfortunately, this means really not spending time with family in person, if they haven't been within the same quarantine group. So I think that's really front of mind for people in California. And we're just thinking about how we can look forward, to a vaccine and to an era where we can be back with our family and friends. But certainly people are thinking about the holiday, but with safety in mind.
Yeah, no, absolutely. And I know that your specialty is autoimmune skin diseases, but I do want to, before we get into the kind of work you guys are doing at your firm and your company, that specifically when you see the rising numbers of people who are traveling, airline traffic, does that say to you that in a couple of weeks we probably are going to look back at Thanksgiving as another super spreader event?
I mean, the data is the data, and we know that the social distancing, and we know that the masks, and we know that, the isolation measures are critical. And, this is a very contagious illness, and, the probabilities are what they are. And if you defy those by, crowded airplanes and, public gatherings, we do see that the disease spreads. So, it would be very, it would be unlikely that we won't see that following the holiday because, people, if they are not heeding the warnings, we're going to see, much greater numbers and the spread is going to be there. So certainly, I think that's why everyone's preparing for that because we're observing that people are still traveling and the airplanes are certainly an area where we know that there is, contagion risk.
Right. It's the antithesis of everything that everybody says, right? It's closed. It's lots of people. It's not an ideal situation. So talk to us a little bit about the work you guys are doing at Medable. You guys are a platform. You bring together patient sites and clinical trial teams. I have members of my family that are in the medical community, so I understand this whole idea, especially when there are, therapies out there, finding people who might be good for a trial, which just helps in kind of learning to know more about a treatment. But tell me about what you guys are doing specifically when it comes to COVID-19.
Sure. So, clinical trials are a critical component of developing new medications. And I think it was an area people didn't really think about prior to COVID. But then once COVID hit, the role of the clinical trials for vaccine and therapy development became something that the broader public was aware of. And, you look at the news coming out of Pfizer and Moderna. Let's take Pfizer, for example. We've had over 40,000 volunteers into the Pfizer vaccine study. And these are people who, want to be a part of the research efforts, who also are eager to get the vaccination, and they've played a foundational role in us, getting through this pandemic. I think our role, Medable, in this is to tackle some of the biggest challenges facing clinical trials. And one of the biggest challenges is access. The pandemic has resulted in closures of many of, the general kind of day-to-day healthcare facilities, right? We don't want people going in there because we don't want to spread the disease.
Right.
And clinical trials in a traditional sense are no different than as you go to your doctor. What Medable's pioneering is really a way to access the clinical trial in the convenience of your own home. And this has become extremely important in the setting of the pandemic. It has become extremely important in these large vaccine trials, where we need the participation. People are eager to be a part of research, and we need to bring that into the comfort of their own home, through the various aspects of the clinical trial. So we've seen a big shift from clinic-based healthcare delivery and clinical trial delivery to much more of a remote, digital, and connected ecosystem, and our company's really been at the forefront of that transition and transformation.
That's fascinating to me, and we've just got about 40 seconds. We'll take a break and come back and talk some more, but how do you actually reach people, especially at a time when the healthcare system overall is pretty strained?
It's through our phones. It's the device we use every day, and that's really the conduit for accessing this care.
That's pretty amazing, and that certainly has then opened you up to people for specifically COVID and these trials, correct?
Absolutely. I mean, smartphone utilization is across the population, across age demographics. And through this device, you can be a part of a clinical trial.
All right. Listen, sit tight, Dr. Longmire. Sit tight for a second. We're going to do a little bit of news and then hopefully come back and continue this conversation. We're going to get back to Dr. Michelle Longmire. She's CEO at Medable. As I mentioned earlier, it's a platform connecting patient sites, clinical trial teams, and they certainly are doing that work right now amid the health pandemic. You are listening to Bloomberg Business Week. We are also awaiting President-elect Joe Biden, expected to make some comments, a Thanksgiving address to the American people. We will take you live to Wilmington, Delaware, as soon as he begins speaking. You're listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, this is Bloomberg Business Week. I'm Carol Massar. We are awaiting some comments from President-elect Joe Biden. As soon as he begins speaking in Delaware, we will take you there. In the meantime, we're going to get back to our guest, the CEO at Medable, and what they are doing in terms of connecting patients, individuals with some of those clinical trials for a COVID vaccine. In the meantime, let's get a check on those top business stories. Let's get back to Charlie Pellet.
Thank you very much. And here's what's going on this Wednesday before a holiday. The S&P retreating from a record. The Dow Jones Industrial Average retreating back below 30,000. Tech-heavy NASDAQ indexes edging higher. Markets closed tomorrow for Thanksgiving, leading to a deluge of data that brought the first back-to-back rise in weekly jobless claims since July. Here's where we stand. S&P lower now by 7, down 0.2%. The Dow down 178 points, down 0.6%. I mentioned the NASDAQ indexes. Right now, the composite index up 48 points, up 0.4%. NASDAQ 100 index up 62 points, up 0.5%. A retreat for the Russell 2000 index, lower now by 0.4%. 10-year up 230 seconds, 10-year yield 0.87%. Gold down 0.1%, lower by $1 the ounce at $18.06. And West Texas Intermediate crude up 1.6%, $45.63 a barrel. A growing number of hospitals around America have canceled or delayed some planned medical procedures to preserve staff and beds for a surging number of Americans sick with COVID-19. Conditions remain especially acute in the Midwest and West. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and she says it won't be until next spring that we start to see results from newly developed vaccines.
I think we're looking to see vaccine uptake be really the focus as we move towards distribution, and the states are already working on a plan, and with that I think we could start to see a much safer place for being out and about and reducing some of those restrictions by late spring, early summer of next year.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names making news this week and last, shares of AstraZeneca, the ADRs here in the U.S., they're down now by 2.3%. Pfizer down 0.6%. Moderna shares, they're up now by 9.4%. After earnings, keeping an eye on shares of Gap based in San Francisco, shares are plunging now by 20.2%. Recapping, S&P down 8, a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. I want to get back to our guest. We're speaking with Dr. Michelle Longmire, CEO at Medable. As I mentioned, it is a platform. It connects patients, sites, and clinical trial teams, and she is still with us on the phone from Palo Alto, California. You know, Dr. Longmire, one thing I want to ask you is, there you are, smack in Silicon Valley, and I do think about the healthcare world. It has been kind of stuck in time, and I do think COVID has definitely disrupted it, and people are embracing telemedicine like never before. We're looking at ways to do things. I've had medical things, and I've done more, checking in, logging in online than I've ever done before. Silicon Valley, what role can they play in kind of bringing our healthcare system to the 21st century? Is Dr. Longmire with us? Okay, we may have just had a little technical glitch, so hopefully we'll get back to her. But we are talking about some of the latest virus headlines, and specifically maybe how technology can kind of bring healthcare to the 21st century. In the meantime, do not forget, we are watching and waiting for President-elect Joe Biden. He is expected to deliver a Thanksgiving address to the American people in Wilmington, Delaware. It's been a big week for the president-elect in terms of finally getting the okay from the current administration permission to begin an official transition, which gives him access to a lot of what's going on in the government, which helps in terms of a transition to the next administration. So that's been key. He's also been, of course, outlining and sharing with the American public what his cabinet and key positions will look like. And we've talked about this on air. It's a lot of diversity. It's a lot of folks that were certainly well known to the Obama administration, also very key insiders for Joe Biden specifically. But it's also names that we know really well, like former Fed Chief Janet Yellen for Treasury Secretary. And of course, these individuals, to some extent, some of them have already been vetted, have gone through this process before. So the expectations are that that will kind of ease the process when they have to go before for Senate confirmation. So, we're just kind of getting more information about that. But it also gives us an indication of maybe what kind of focal points will be part of the new administration. Janet Yellen is known for her work on labor economics and the labor market. So we know our labor market, as we heard from Mike McKee, certainly in a tricky position specifically. John Kerry being appointed a special climate ambassador. So that is showing that's a new position, and certainly at least projecting that climate change and the climate impact will be a key pillar of the Biden administration. And of course, first and foremost, he's going to have to deal with COVID-19 and pick up where the Trump administration left off, certainly on a vaccine and elsewhere. Want to get back to our guest, Dr. Michelle Longmire, CEO at Medable, still with us from Palo Alto, California. We're a high-tech world, Dr. Longmire, but still, of course, technology doesn't always, it fails us occasionally. I asked, or I put out the question of, there you are, in Palo Alto, smack in the middle of Silicon Valley. Healthcare, we know, has been slow to change, slow to disrupt. But the virus has definitely made people do more telemedicine. We'd start to see some changes in the healthcare system. What role can and should Silicon Valley be playing even more so when it comes to kind of bringing healthcare to the 21st century?
Sure. I think that the pandemic is an unprecedented opportunity for Silicon Valley and technology to show the value around major changes. So, what we've seen is, say, telemedicine, utilization up by 5x of what it was before. This is, really important that as a tech industry, we're able to move quickly to use the window of opportunity to bring in these changes and to really, for us as a, clinical trial company, to serve patients in new ways as they're looking to connect to the healthcare system with new technologies.
No, and bringing it back to your company, just got about 40 seconds left here. I mean, the more patients that get involved in clinical trials, we ultimately, on the other side, figure out what treatments can best serve us as a population.
Absolutely. I mean, clinical trials are the route to us, achieving cures to 7,000 or more uncured diseases today. And they are a fundamental part of us developing new medications. So it's to the benefit of everyone. I'd encourage everyone, to consider clinical trials. It's super important for us as, we move forward with better health as a society, and certainly as we've seen with COVID-19.
All right. Listen, great to check in with you, and I'm glad we were able to reconnect. Be well. Have a great Thanksgiving. Dr. Michelle Longmire, she is CEO at Medable, and she is joining us on the phone from Palo Alto, California. So you are listening to Bloomberg Business Week. We are awaiting some comments from President-elect Joe Biden, and we will see whether or not we will get more information about his cabinet, but just also some of the key initiatives as he moves forward and heads towards the White House come January. So let's get another check on world and national news. Nancy Lyons, I know, also awaiting Mr. Biden.
Right. Well, we are expecting President-elect Joe Biden to be giving a Thanksgiving address in just a few minutes. He's expected to acknowledge the sacrifices many Americans are making this year. As for Biden's personal plans for tomorrow, his aide Kate Benningfield says he and his running mate Kamala Harris are scaling back.
The president-elect and vice president-elect will be spending time with their respective families and do not have any scheduled in-person events.
We could be getting closer to a coronavirus vaccine with promising results from several trials. Moncef Slaoui leads the U.S. vaccine development for Operation Warp Speed. He joined CBS this morning to talk about a timeline for vaccine approval and distribution.
Within the first wave, we think there is about 110 million people. Those should be covered based on our plans between the month of December and the month of February. Now, the U.S. population as a whole should be covered in terms of vaccine doses available somewhere between the month of May and the month of December.
Slowey says he has not yet met with President-elect Biden, but he plans to do that shortly. Meghan Markle says she suffered a miscarriage over the summer. Writing in the New York Times, the Duchess of Sussex says it happened while she was lifting her 18-month-old son Archie out of his crib. She says she's sharing her story to help break the silence around an all-too-common tragedy. And a major loss in the international soccer community. Legend Diego Maradona has died of an apparent heart attack. He was 60. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy Lyons, thank you so much. You are listening to Bloomberg Business Week. Carol Massar joining me once again is the one and only Charlie Pellet. And check this out. You know, listen, we know the stories. You come to New York, you're young, you want to work there, you want to live there. It's so expensive. So you end up being like in a studio or one bedroom with like 3 roommates.
Exactly.
It's not ideal.
No, it isn't. And it's a fascinating story. New York City rent plunges, let budget-minded roommates finally live alone. It's a story written by our Oshrat Carmiel, and would love to give a little bit of credit to co-author Billy Joel.
I love you, Charlie. Yeah, little Billy Joel. Thank you so much. But yeah, right, you're saying, listen, roommate, I love you. Let's have dinner. Let's have a drink after the pandemic. But man, I'm tired of living with you, and I'm tired of sharing a studio with you.
Exactly, and here's what's going on. The rents are coming down. Studio apartments now at the lowest in nearly a decade, and you can say, you know what, this is just not working out. So roommate, I'm out of here.
Okay, so listen, perspective, and you and I always like to do this because I know when we start talking about numbers in the New York metro area, anybody else across the country who's listening on Bloomberg Radio are like, you guys are crazy. But in October, Manhattan studio rents tumbling 17% from a year earlier to a median of $2,245. Yes, still sounds like a lot, but it's low for New York Metro and New York City specifically. Lowest since 2011 data from appraiser Miller Samuel and Douglas Elliman.
And yet, though, Carol, I know our listeners in San Francisco are listening to this and saying, hey, that's a bargain. Where can I snap up a studio for that kind of rent? Because, you know, we talk about Manhattan, we talk about New York City. Truth of the matter is, yes, you can find low rents around New York City depending on where you're willing to live, where you're willing to travel to. But, you know, San Francisco's been grappling with high rents for decades.
Right, and there's stories of people even negotiating that median rent down even hundreds of dollars more, or the landlord paying some of the closing, you know, paying some of the fees, you know, involved in the process. So because, listen, we know that there's a lot of vacancies and landlords are looking to fill up some of those apartments. All right, Charlie Pellet, thank you so much. You're listening.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a mixed Wednesday ahead of a holiday tomorrow with the S&P retreating from yesterday's record. The Dow Jones Industrial Average back below 30,000, 29,834 right now on the Dow. Dow Industrials down 210 points, a drop now of 0.7%. S&P is down 10, a drop of 0.3%. NASDAQ up 46, a gain of 0.4%. 10-year yield 0.87%. We've got gold down 0.1%, 18.06 the ounce, and crude rallying back above $45 a barrel, 45.49 now on WTI, up by 1.3%. Recapping, S&P down 10, drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So much. So you are listening to Bloomberg Business Week. I'm Carol Masser. We continue to learn every day about the power of social media companies such as Google and others. And this story reported for Bloomberg Business Week really plays into that big time. It's how Google's deep pockets really make some of its rivals less eager for an antitrust crackdown. You're probably saying, wait, what? So let's get into this with our own Bloomberg Business Week editor, Joel Weber. He's joining us on the Access line in Brooklyn. This story written by Mark Bergen, who is technology reporter at Bloomberg News. But Joel, let me kick it off with you first. I mean, this is a story that I feel like, we continue to see some of these big social media players, big, tech players, they just continue to dominate. And some of it is because of some of these relationships they have with even some of their smaller competitors.
Yeah, that's what makes this story, I think, part of an interesting antitrust conversation, and an element that I hadn't heard before, and part of that is Google has really just an amazing monetization ability, and as part of that, they are not shy about throwing their cash around, and a lot of that cash goes to we'll call them rivals, even though that you might not totally always think of them as rivals. Right. But in this case, and the one that I'd love to have Mark talk more about, Mozilla, which has a rival product in its Firefox browser, actually makes a lot of money from Google, even though Google has a rival product in Chrome. So Mark, talk to us about how Mozilla and Firefox sort of see this relationship with Google in light of the antitrust conversation that we're in the middle of.
Yeah, sure. I think there's like two different versions, right? There's the front-facing sort of official version, which is we have Mozilla in the story saying, it's interesting that they actually switched to Yahoo in 2014 because Yahoo was willing to give them a lump sum, from my understanding, even like $100 million more a year than Google, which is great from Mozilla's standpoint to have that much more money. But then a lot of their Firefox users just started switching over to Google. And so by their telling, officially, a lot of people just prefer Google search over alternatives. You talk to sort of privately with a lot of people that work there, and they're like diehard privacy advocates, right? And they're kind of, some of them are disturbed or upset about some of Google's privacy practices. And so it's as much as they want to push on Google for Chrome, and they have done some marketing, and they came out with a great billboard a few years ago that said "Big Browser is watching you." They're well aware that they're sort of like poking the bear, and they're actually kind of targeting who is their biggest bankroller. So it's a very awkward, I think, kind of unique position for the company to be in, that many other Google partners are also in.
Right, and so that kind of brings us to the antitrust context. So how would like a regulator look at an arrangement like this and try and make sense of it?
Mozilla's come out and publicly, and I think mostly we expect them to do privately, to say the DOJ is coming after these search deals that Google has, where they pay up front for distribution of the search engine. That seems to be something where you're going to see a lot of companies that wouldn't maybe normally come out in support of that now arguing, please don't make those illegal because they're really important for our bottom line. So I don't know how the DOJ is going to land on that. You certainly, like, the Apple-Google relationship is a really fascinating one.
Well, get into that one. That's the one that blew my mind in your story, because they really benefit from each other.
It's a great mutual benefit. I mean, Google always talks about how it has a horizontal business, right? And so much of their advertising, right? They're sharing revenue with publishers. They're sharing with websites and YouTube, right? It's all the same sort of model. And with Android, right? Every single Samsung gets a lump of change every year from the Google searches on Samsung, and Apple gets the same deal, although it is a much more secretive deal. There are very few people at both companies that know the details of that. As we reported, Apple had talked to Microsoft and Bing a few years ago. I think that really scared Google because they get so much revenue from iPhones.
Mark, can we talk about like Mozilla specifically, and like how much do they get in cash, cold hard cash from Google, and how significant is that to their bottom line?
Yeah, so Mozilla is a nonprofit. It's a private company owned by a nonprofit, so they put out numbers. The last numbers from I think was 2018, where they don't give the exact figures. They have a line item that says from Google, but they have royalties, and the royalties were close to they said about 90% of their royalties, I believe, in 2018 is over $400 million a year in revenue, and a bulk of that comes from these search deals. And so based on our sourcing, that's like about 80%, probably minimum of that of their entire revenue comes. So this is close to half a billion dollars a year.
It's amazing. So you also mentioned that and you mentioned this earlier, the privacy element, and one of the things that you sort of had explored or was explored in the story is that there was actually a kind of a nascent ability to sort of jump into the search game. Oh, you're going to cut me off for Joe Biden, aren't you?
I love you dearly. Happy Thanksgiving, but we do have to go to the president-elect. Let's go to Delaware, everyone.
Thanksgiving, authorized by the Continental Congress, took place on December 18th, 1777. It was celebrated by General George Washington and his troops at Gulf Mills on the way to Valley Forge. And it took place under extremely harsh conditions and deprivation, lacking food, clothing, shelter. They were preparing to ride out a long, hard winter. And today, you can find a plaque in Gulf Mills marking that moment. Here's what the plaque reads. It says, "This Thanksgiving, in spite of the suffering, showed the reverence and character that was forging the soul of a nation." Forging the soul of a nation. Faith, courage, sacrifice, service to country, service to each other, and gratitude even in the face of suffering have long been part of what Thanksgiving means in America. Looking back over our history, you see that it's been in the most difficult circumstances that the soul of our nation has been forged. And now we find ourselves again facing a long, hard winter. We fought a nearly year-long battle with a virus that has devastated this nation. It's brought us pain and loss and frustration. And it's cost so many lives. 260,000 Americans and counting. It's divided us, angered us, set us against one another. I know the country has grown weary of the fight. We need to remember we're at war with a virus, not with one another, not with each other. This is the moment where we need to steel our spines, redouble our efforts, and recommit ourselves to the fight. Let's remember, we're all in this together. Sounds trite to say it, but we're all in this together. For so many of us, it's hard to hear this fight isn't over. And we still have months of this battle ahead of us. For those who've lost a loved one, I know that this time of year can be especially difficult. Believe me, I know. I remember that first Thanksgiving, the empty chair, the silence, takes your breath away. It's really hard to care. It's hard to give thanks. It's hard to even think of looking forward. And it's so hard to hope. I understand. I'll be thinking and praying for each and every one of you at this Thanksgiving. at your Thanksgiving table because we've been there. This year we're asking Americans to forego so many of the traditions that we've long made in this holiday, which made it so special. For our families, for 40 some years, we've had a tradition of traveling over Thanksgiving. Tradition that we've kept every year save one. The year our son Bo died. But this year, we'll be staying home. We've always had the big family gatherings at Thanksgiving. Kids, grandkids, aunts, uncles, brothers, sisters, and more. For the Bidens, the days around Thanksgiving have always been a time to remember all we had to be grateful for, and a time to begin to think about Christmas and begin even to do the Christmas list. But this year, because we care so much for each other, we're going to be having a separate Thanksgiving. For Jill and I, we'll be at our home in Delaware with our daughter and our son-in-law. The rest of the family will be doing the same thing in small groups. So I know how hard it is to forego family traditions. But it's so very important. Our country's in the middle of a dramatic spike in cases. We're now averaging 160,000 new cases a day. And no one will be surprised if we hit 200,000 cases in a single day. Many local health systems are at risk of being overwhelmed. That's the plain and simple truth. Nothing made up, it's real. And I believe you always deserve to hear the truth from your president. We have to try to slow the growth of this virus. We owe it to the doctors and the nurses and other frontline workers, care workers, who've risked their lives, some lost their lives, put so much on the line in a heroic battle in this virus against it for so long. You know, we owe that to our fellow citizens who need access to hospital beds and care to fight this disease. We owe it to one another. It's literally our patriotic duty as Americans. It means wearing a mask, keeping social distancing, limiting the size of any group we're in. Until we have a vaccine, these are the most effective tools to combat the virus. Starting on day one of my presidency, we will take steps that will change the course of this disease. More testing will find people with cases and get them away from one another, slowing the number of infections. More protective gear for businesses and our schools to do the same, reducing the number of cases. Clear guidance will get more businesses and more schools open. We all have a role to play in beating this crisis. The federal government has vast powers to combat the virus. And I commit to you, I will use all of those powers to lead a national coordinated response. But the federal government can't do this alone. Each of us has a responsibility in our own lives to do what we can do to slow the virus. Every decision we make matters. Every decision we make can save lives. None of these steps we're asking people to take are political statements. Every one of them is based on science, real science. Now, the good news is there has been significant record-breaking progress made recently in developing a vaccine. And several of these vaccines look extraordinarily effective. And it happens that we're on track for the first immunization to begin by late December, early January. Then we'll need to put in place a distribution plan to get the entire country immunized as soon as possible, which we will do, but it's going to take time. I'm hoping the news of the vaccine will serve as an incentive to every American to take these simple steps to get control of the virus. There's real hope, tangible hope. So hang on. Don't let yourself surrender to the fatigue, which I understand it is real fatigue. I know we can and we will beat this virus. America's not going to lose this war. We'll get our lives back. Life is going to return to normal, I promise you. This will happen. This will not last forever. So yes, it's been a really hard year, particularly hard for over 250,000 people and their families. But I still believe we have much to be thankful for. There's so much to hope for, much to build on, much to dream of. Here's the America I see, and I believe it's the America you see as well. America that faces facts, an America that overcomes challenges, an America that where we seek justice and equality for all people, an America that holds fast to the conviction that out of pain comes possibility, out of frustration comes progress, and out of division, unity. You all know in our finest hours, that's who we've always been, and that's who we shall be again. For I believe that this grim season of division, demonization, is going to give way to a year of light and of unity. Why do I think so? Because America is a nation not of adversaries, but of neighbors. Not of limitations, but of possibilities. Not of dreams deferred, but of dreams realized. I've said many times that this is a great country. We are a good people. This is the United States of America. And there's never been anything we've been unable to do when we've done it together. Think of what we come through as a nation. How many things we've come through? Centuries of human enslavement, cataclysmic civil war, exclusion of women from the battle box, world wars, Jim Crow, the long twilight struggle against Soviet tyranny that could have ended not in the fall of the Berlin Wall, but in nuclear Armageddon. Look, I'm not naive. I know that history is just that, history. But to know what came before, what's come before, what's happened before, can help arm us against despair. Knowing that previous generations got through the same universal human challenge that we face. The tension between selfishness and generosity, between fear and hope, between division and unity. And what was it that brought the reality of America into closer alignment with the promise of reality, justice, and prosperity? Sounds corny, but it was love, plain and simple. Love of country, love of one another. We don't talk much about love in our politics. The political arena is too loud, too angry, too heated. To love our neighbor as ourselves is a radical act. It is what we're called to do. We must try. For only in trying, only in listening, only in seeing ourselves as bound together in what Dr. King called the mutual garment of destiny, can we rise above divisions and truly heal. Look, we all know America's never been perfect, but we've always tried to fulfill the aspiration of the Declaration of Independence, that all people are created equal, created in the image of God. And we've always sought to form a more perfect union. What should we give thanks for this season? Well, first, let's be thankful for democracy itself. In this last election, the one that just took place, we've seen record numbers of Americans exercise their most sacred right, that of the vote, to register their will at the ballot box. Think about that. In the middle of a pandemic, more people voted this year than have ever voted in the history of the United States of America. Over 150 million people cast a ballot. Simply extraordinary. Many of them waiting in line 5, 6, 7, 8 hours to vote. If you want to know what beats deep in the heart of America, it's this: democracy. The right to determine our lives, our government, and our leaders. The right to be heard. Our democracy was tested this year. And what we learned is this: The people of this nation are up to the task. In America, we have full and fair and free elections. And then we honor the results. The people of this nation and the laws of the land won't stand for anything else. Through the vote, the noblest instrument of nonviolent protest ever conceived, we remained anew and were reminded anew that progress is possible, that we the people, have the power to change what Jefferson called the course of human events. And with our hearts and our hands and our voices, today we can be better than yesterday. And tomorrow we can be still better than that day. You know, we should be thankful too that America is a covenant, an unfolding story. That we have what we need to create prosperity, opportunity, and justice. Americans have grit and generosity, a capacity for greatness, and reservoirs of goodness. We have what it takes. Now we have to act. This is our moment, ours together, to write a newer, bolder, more compassionate chapter in the life of the nation. The work ahead is not going to be easy. It will not be quick. You want solutions, not shouting. Reason, not hyper-partisanship. Light, not heat. You want us to hear one another again. See one another again. Respect one another again. You want Democrats and Republicans and independents to come together and work together. And that, my friends, is what I'm determined to do. Americans dream big. As hard as it may seem this Thanksgiving, we're going to dream big again. Our future is bright. The fact I've never been more optimistic about the future of America than I am right now. I, honest to God, believe the 21st century is going to be an American century. We're going to build an economy that leads the world. We're going to lead the world by the power of our example, not just the example of our power. We're going to lead the world on climate and save this planet. We're going to find cures for cancer and Alzheimer's and diabetes. I promise you. We're going to finally root out systemic racism in this country. And this Thanksgiving, in anticipation of all the Thanksgivings to come, let's dream again. Let's commit ourselves to thinking not only of ourselves, but of others as well. For if we care for one another, if we open our arms rather than brandishing our fist, we can, with the help of God, heal. And if we do, and I'm sure we can proclaim the psalmist who wrote these following words. The Lord is my strength and my shield, and with my song I give thanks to him. I give thanks now for you, for the trust you've placed in me. Together, we'll lift our voices in the coming months and years, and our song shall be of lives saved, breaches repaired, a nation made whole again. Folks, from the Biden family to yours, wherever and however you may be celebrated, we wish you a happy Thanksgiving. May God bless you, and may God protect our troops. Happy Thanksgiving.
All right, you've been listening to President-elect Joe Biden delivering a Thanksgiving address in Wilmington, Delaware, to the American people, talking about shared sacrifices that Americans are making, need to be making, including his own family this holiday season, and saying that we can indeed and will get through this current crisis together. Once again, stressing what we've heard from so many members of the medical community, that it will be time until we immunize all Americans with a COVID-19 vaccine. And in the meantime, social distancing, wearing masks and thinking about your community are key in order to all of us getting through the COVID-19 pandemic. He said as soon as he hits the ground running come January, that there will be a national coordinated response, but again, stressing that the federal government cannot do this alone, but does plan and anticipate more testing, more protective gear for schools and businesses once he is in the White House, and clear guidance to allow more businesses and schools open. In the meantime, though, the president-elect saying America finds itself facing a long, hard winter. You are listening to Bloomberg Business Week. I'm Carol Masser. So with that in mind, a lot really caught my attention reading in on this Thanksgiving Eve. And I got to say, when Peter Coy writes something, it definitely is something that I consider a must read. And this story in particular that caught my attention this morning was about how President-elect Joe Biden may have about 16 days to stave off a nuclear arms race. It's, a pretty heavy issue. So let's get into it. Peter is Bloomberg Business Week economics editor, and Peter joins us on the phone in New Jersey. Peter, thanks for standing by as we listen to the president-elect. Tell us about your story that's on the Bloomberg terminal today.
Right. Well, thanks for having me on, Carol.
Yeah.
The reference of 16 days is to the inauguration on January 20th, followed by the expiration of the New START Treaty on February 5th. New START is the last bilateral nuclear arms control treaty between the U.S. and Russia. It's coming up for renewal, and the Trump administration has failed to work out an agreement with Russia. So they still could. It's possible that they'll pull something off in the next couple of months, but if not, that treaty would expire. So you would assume that the Biden administration would have to put a very high priority on getting something done in those first 16 of the famous 100 days.
Right. It's just a reminder that he's going to have a pretty full plate, right? Dealing with the virus, dealing with the economy, dealing with the labor market, dealing with, global issues like START. I mean, what's the history of START? Remind us about that.
Well, we had this SALT. Old-timers remember SALT, Strategic Arms Limitation Talks, and then there was START, which was Strategic Arms Reduction Talks. And then in 2011, we got New START. And again, it's just between the two countries, the U.S. and Russia, and it puts a cap on the number of warheads that each country can deploy, both warheads and the number of long-range delivery vehicles. So the U.S. accuses Russia of the U.S. would acknowledge that Russia is complying with the main provisions, but they want stronger verification provisions, and they want the treaty to expand to cover other types of nukes, intermediate range and so on, short range, as well as new delivery vehicles such as hypersonic glide vehicles. These are very scary things that travel many times the speed of sound. So that's the goal. But Biden would never be able to negotiate a brand new treaty in 16 days. So the idea would be, look, let's just give a 1-year extension on this, and then we'll see where we go from there.
Well, and it's interesting because the Trump administration, from what I understand, they've wanted to broaden this treaty, right, to cover Russian nukes, and I think also to cover China. Is that correct?
Well, yes, they did. That would be extremely ambitious. And also, it's beyond anything that Russia could deliver. You can't complain to Russia that China's not joining your treaty. So it's kind of a stretch to start with, and it seems like definitely there's strong reasons to want to get controls on Chinese nukes, but trying to do it through the mechanism of a New START is probably the wrong approach.
Peter, I'm just thinking about all the conversations that were recently at the Bloomberg New Economy Forum, and we talked about, and you study these kinds of things, I mean, the billions and trillions of dollars that are still spent on nuclear weapons and having some kind of nuclear strategy, realistically in the hopes that nobody ever uses them, and yet here we are. And I do think about that money better spent and what it could do for our global economy.
Well, yeah, and that's one of the reasons this is an economic story. It's an economic story partly because if there were a nuclear war, we wouldn't have an economy. Right. But as you said, this is fantastically wasteful just on the face of it. I mean, your goal when you spend trillions of dollars on the military is that it all entirely go to waste, right? Because that means you succeeded in not having a war.
Exactly.
So, I mean, that just doesn't make sense. You'd much rather find a way to de-escalate, and nuclear arms races don't benefit anyone. So if Biden could possibly keep a lid on this, that'd be a nice way to start off his administration.
Hey, since I've got you, and I feel lucky that we do, I haven't had a chance to talk to you about Janet Yellen as Treasury Secretary in a Biden administration. I just would love to have you weigh in terms of what's going to be her toughest task, and what will be key for her in that position if indeed she gets confirmed.
She'll be facing the same issues that the current administration is facing. We've got to get a new coronavirus relief package in place. That she'd be a voice in that. It'll be fascinating to see how Treasury and the Fed cooperate under Biden, because we'll have past Fed chair with current Fed chair know each other very well, work together, and see mostly eye to eye. So I would say there's a much better chance that the Yellen be a voice for fiscal stimulus, which is exactly what Jay Powell, the current Fed chair, has been asking for. He's saying the Fed can't do it alone. The Treasury needs to step up and help as well.
Yeah, well, if anybody understands what the Fed can do and what their responsibilities are, is certainly Janet Yellen. So you do think that will be a really, really smart bridge in all of this. Thank you so much, Peter. Have a great Thanksgiving, a safe Thanksgiving. Peter Coy, check him out on Twitter and also on the Bloomberg and at Bloomberg.com. He is economics editor for Bloomberg Business Week. Okay, right now we do want to get another check on your top business headlines, get another check and update on the trading day. Here's once again Charlie Pellet.
Thank you very much. Tech investors giving thanks. 41 minutes to go ahead of the closing bell. 41 minutes to go until the Thanksgiving break for a lot of people. The rotation out of tech shares and into cyclicals sparked by promising vaccine news reversed today as investors cast a wary eye on a batch of data that suggests a possible slowdown in economic growth. S&P 500 index retreating from a record. Dow Jones Industrial Average falling back below 30,000, 29,882 right now on the Dow. It is down 165 points, lower by 0.6%. The S&P down 4, little change, down by about 0.1%, but certainly a lot of interest in tech stocks today. NASDAQ down up 64 points. NASDAQ now at 12,110. Green on the screen for NASDAQ, up 0.5%. The NASDAQ 100 index pushing higher by 0.6%. Russell 2000 moving lower, down 0.3%. 10-year yield 0.87%. Gold little changed, up 94 cents the ounce at 18.08. West Texas Intermediate crude up 1.6%, 45.61 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Great stuff as always. Thank you so much, Charlie Pellet. You are listening to Bloomberg Business Week. Bloomberg Green. It is brought to you by PGIM, the investment management business of Prudential, committed to better outcomes for ESG investments. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. So I do want to get to our Bloomberg Green segment, because changing times based on the changing political winds, that story in our Bloomberg Green segment today, really about how today's smart money is staying away from Arctic oil drilling. Let's get into it with Bloomberg News environmental regulations reporter Jennifer Deloe. She is with us on the phone from the nation's capital. Hey, Jen, nice to have you here with us. So we're talking about drilling rights and selling those drilling rights. That's something the Trump administration has been pretty aggressive about doing.
Absolutely. They were part of a push several years ago to get Congress to basically mandate that they stand up a drilling program in the Arctic as part of the tax cut bill in 2017. And now they're taking really concrete steps to try to get drilling rights sold really in the final days and maybe even hours of the Trump presidency. We could see a lease sale January 19th, trying to basically get these drilling rights out the door.
And folks are lining up for them, correct? A little sarcasm. Well, listen, I feel like this speaks to so many conversations we have on Bloomberg that, right, you can put it out there, but the winds have changed, especially when it comes to things like this and the impact on the climate and kind of where the energy markets are going.
That's exactly right. I mean, we see the same thing in the market, with coal and natural gas and in the electricity market. And here, it's just remarkable. Had this sale happened even a year ago, you'd have probably seen much more interest, much more activity, including some bigger names. And the reality is that oil companies are facing, not just the reality of a Biden administration that has promised to block Arctic drilling. So these leases are really going to be worthless for 4 years at least. But they're also seeing, financing dry up for these projects. And the PR, hit that they would take from drilling in the Arctic, which is wildly unpopular, is a significant factor too. A year ago, some of these considerations were not at play.
Jen, what I think really, I thought interesting, that anybody who bids on these drilling rights, as you say in your reporting, will need outside financing. And again, as you said, the PR image, there are a lot of banks who are like, thanks, but no thanks, because increasingly we're seeing among the big investors, institutional investors, they are looking at the investments, the loans that a bank makes, right? The business that it transacts in terms of how it fits into increasingly ESG criteria.
Well, that's exactly right. I mean, we've seen 5 major U.S. banks adopt policies saying that they are not going to finance oil and gas projects in the Arctic Refuge. And they're saying, that they're adopting these policies not because they're, just being pressured by environmentalists, which is something you hear from the Trump administration. But in fact, there are real financial risks involved. They've already taken hits with their oil investments. And of course, they're concerned about risks to the climate, to their investments, and their reputation if they keep underwriting these projects.
So what happens, though, if somebody does buy a lease before the Biden administration steps in? It's real, right? And it can lead to drilling?
In fact, it can. So these leases, if they are formally, not just sold, but actually formally issued before Biden is inaugurated, they're 10-year contracts, and it's really hard to get out of a contract and would be really hard for the Biden administration to walk away from them. The reality is every single permit these companies would need to actually do something with those leases is not going to come in the next 4 years. I mean, we're talking about drilling permits, but also various environmental approvals and wildlife approvals. So all of those are an obstacle to actually standing up activity in the next 4 years. One thing that's going to be interesting to see is really who shows up. We won't have big names, but we could see some speculators and little-known companies that have ties with Alaska interests that want to see this area developed.
Yeah, it's a fascinating story and a deep dive into what's going on. As everything else is going on around us, we've got to keep a watch on these kinds of things. Jen, thank you so much. Jennifer Deloe, she is environmental regulations reporter for us here at Bloomberg News in our Bloomberg Green segment today. Check her out on Twitter, and you can check her out on the Bloomberg Terminal and also at Bloomberg.com. You're listening to Bloomberg Business Week. Coming up, we're going to get into one of the most read stories. In fact, I think it's the most read story on the Bloomberg. It has to do with bonuses. You're listening to Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Masser right here on Bloomberg Radio. It is our number one story on the terminal in the past 8 hours. Has to do with a flat bonus pool. Wait, what? So we're going to get into that story in just a moment. First up, though, let's get back to your top stories. Check on that trading day. Right, we put bonus in a headline, Charlie Pellet. Everybody reads it.
That's all it takes, and here's what's going on. We've got the Dow, the S&P retreating from a record. Going to be very interesting to see what happens in the next 29 minutes. We've got a holiday tomorrow for a lot of people. U.S. markets will be closed right now. The S&P 500 index trading almost flat. It is down by just about 2 points now, down less than 0.1%. The Dow is down 151, down 0.5%. NASDAQ keeps on going, looking at a possible record close. They're up 73 points now, higher by 0.6%. To put the loss for both the Dow and the S&P in context, they are pulling back from yesterday's records. The rotation out of tech shares and into cyclicals, sparked by promising vaccine news, reversed today as investors cast a wary eye on a lot of data that suggests a possible slowdown in economic growth. We've got the 10-year yield 0.88%. Gold is down 0.1%, now 18.06 the ounce, and West Texas Intermediate crude up 1.6%, now at 45.64 a barrel. A growing number of hospitals around the U.S. have canceled or delayed some planned medical procedures to preserve staff beds for a surging number of Americans sick with COVID-19. And lots of people are on the move today, making their way home to friends and family for Thanksgiving Day amid warnings about an uptick in cases. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
Travel is still high. We're seeing airline data showing that people are definitely still traveling. People are coming home. Kids are coming home from colleges. Kids are coming home from primary and grade schools. And so there's going to be new mixing in these populations that we haven't seen otherwise. So we are expecting the cases to definitely tick up, and we're hoping that people are as careful as possible when they make their holiday choices.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies, taking a look at some of the vaccine shares. AZN, that's AstraZeneca, the ADR is traded here in the U.S. They're down today by 2%. We've got Pfizer shares lower by 0.3%. Moderna is up today, surging 10.3%. Briefly, earnings news, Gap plunging now by 20%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. So just scanning my Bloomberg terminal, and yeah, this is the most read story in the past 8 hours on the Bloomberg, and kind of, feeling a little bit chilly across Wall Street. This story is about Bank of America's leaders, how they are planning year-end bonuses that break with Wall Street's traders' hopes for hefty raises. It's kind of odd considering they've had a bit of a record-setting run. So let's explain what's going on. Michelle Davis, finance reporter at Bloomberg News. She's with us once again on the phone from Vermont. Michelle, good to have you here with us. You know, you put bonus in a headline and it's going to trend high on the Bloomberg. What's going on here?
Yeah, so, as you mentioned, Bank of America's senior executives have been floating plans right now about, what bonuses are going to look like. It's that time of year. And a lot of people in the industry, traders, have been expecting to get big payouts because trading revenue has surged this year. It's been one of the best years in a decade or since the financial crisis. Some people feel like they've worked harder than they ever have before. And the color we're getting is that execs are actually thinking about keeping the bonus pool flat for traders, even though, trading revenue jumped 20% in the first 9 months of the year. And a lot of this has to do with the fact that, Bank of America, while it has Wall Street operations, also has a big consumer bank that hasn't been performing as well over the past few months. This, matches what other banks have also been dealing with. And so, banks have had to put up a ton of money, billions of dollars, to cover potential loan losses on the consumer side of their businesses. And so in preparation for that, they're having to temper expectations about bonuses on the Wall Street side to try to,
steady the ship before
Right.
a possible uncertain 2021.
Right. And some would say, listen, that's executives, the C-suite being responsible and looking at the whole business and saying, okay, what do we need to do to make sure 1 year from now we're in pretty good shape, right? Because we still don't have a lot of visibility about next year. And so some of them would say, or some would argue, right, that it's top brass being responsible.
Exactly. And, it's a pretty big deal because, as we've been talking about, this year, the 5 biggest U.S. investment banks, they're on pace to generate almost $100 billion in trading revenue for the first time in more than 10 years. And if Bank of America comes out and says, bonuses are probably going to be flat, all the other banks, they pay close attention to, not only surveys about compensation, but also what competitors are doing, because no one wants to be the one paying the least, but they also don't want to be, the entity that's handing out big wads of cash when they could get away with, paying less. And so Bank of America coming out, this story could give others cover to pay less than what they would have paid. And all of this kind of, I guess, based on what we know from surveys, there's a compensation consultant, Johnson Associates, it's a compensation consultant. Earlier this month, they projected that equity traders, could see bonuses jump by 25%. Bond traders could see them increase by 45% or more. If one of the biggest Wall Street banks is going to keep it flat, then, maybe the survey wasn't totally right. But we still don't know. There's still a month left in the quarter. In the fourth quarter, things could change, but yeah.
Well, and I think it's a key point about Bank of America, right? Because they've got a big consumer side. And I have to say, anecdotally, I know people who've been reaching out to some of the big banks for either home equity loans or so on. And what they're hearing is that they're not doing any kind of new loans. So they're being a lot more conservative going forward. And you do wonder what that means about what they're seeing internally, maybe on the consumer side of the business. I'm not saying B of A specifically, but just in general, that's what I've been hearing. So I don't know, I'm thinking about an individual. Can they lobby for a larger payout? Like, how does this work? And just got about 40 seconds here.
Yeah, so what we understand is that not all of this is set in stone just yet. If there are high performers who, did really well, there's still time for executives to lobby for larger payouts for them. But I think that the other big thing to keep in mind here for Bank of America is there's a lot of optics here. The economy is struggling, businesses are shuttering, people are losing their jobs.
Yeah.
Brian Moynihan, the CEO, he recognizes that it probably doesn't look great to be handing out huge checks to, traders at a time like this. And so that's definitely something that's going to be coloring any decision.
Yeah, and safe to say that's left over from the financial crisis, right? We saw a lot of sensitivity in terms of what the big banks were doing, what Wall Street was doing, certainly at the time of the financial crisis, and having to kind of either force it, rein it in because the regulators are just trying to not be tone deaf amid a really, really tough time. Listen, thanks so much. Michelle, thank you. Have a great Thanksgiving. Michelle Davis, she's finance reporter at Bloomberg News, joining us on the phone in Vermont. All right, I do want to get back to world and national news. Lots going on. Let's toss things over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. President-elect Joe Biden is acknowledging the sacrifices Americans are making this Thanksgiving. He gave a special address this afternoon in Wilmington, Delaware.
I know how hard it is to forego family traditions, but it's so very important. Our country's in the middle of a dramatic spike in cases. We're now averaging 160,000 new cases a day.
He's asking all Americans to hang on. A vaccine is just around the corner. Biden says his family is foregoing the annual Thanksgiving trip to be with family. He says he'll celebrate the holiday at home in Delaware with his wife and his daughter's family. President Trump continues to insist he won the election. Today, he spoke by phone to a group of Republicans in Pennsylvania.
This election has to be turned around because we won Pennsylvania by a lot, and we won all of these swing states by a lot.
State election officials and international observers, though, have insisted there is no evidence of widespread voter fraud, and Trump's legal team has repeatedly lost its cases in court. The president had expected to be there in person, but canceled when another aide tested positive for the coronavirus. The Supreme Court says it will continue to hear arguments by phone through at least January because of the pandemic. The court's announcement extends telephone arguments by a month. The court said it would closely monitor public health guidance in determining plans for the February 2021 argument session. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, really appreciate that update. You are listening to Bloomberg Business Week on this Wednesday, November 25th. I'm Carol Massar along with Charlie Pellet. So this story on the Bloomberg, and I feel like we're in an interesting time when it comes to the market environment, right, Charlie? We saw records yesterday on the Dow and the S&P. We talk constantly about the disconnect between Wall Street and Main Street. And investors, if you talk to some of the world's biggest investors, according to our team at Bloomberg, in terms of how they see the end of the global pandemic and then how to play it from an investment perspective, you get some different stories.
I tried to find a song that had global fund giants in it, but it wasn't happening, And this story here, written by Bloomberg News, talks about J.P. Morgan Asset Management's recommendations is to buy beaten down shares of travel companies, airlines, and hotels today. I'm looking at some of the airline stocks today. UAL up 1.3%, American Airlines up by 0.5%. Really is a mixed picture, though, because on the minus side, you got Delta and Southwest rounding out the big four. They are heading the other way. Delta down by 0.1%, and Southwest lower by 0.6%.
Yeah, listen, and we have talked a lot on air about equity sector rotation, right? And I think that's going to be kind of our big theme, and that's according to some of the experts in this article, that's what we're going to be going through, especially as we have these stops and starts again when it comes to a vaccine, getting it out to the public, whether we get more aid, and that is certainly going to determine the asset plays here. Fidelity's multi-asset team, they're increasing holdings in regions such as Europe that are badly hit by the virus, betting that they're going to get better. That's kind of a value play. Franklin Templeton contending it's, still too early to move away from places like Asia that have better handled the crisis. So you do have divergent views.
I guess kind of like roulette. You put the chip on a number of different squares at once and see what happens.
No, there's fundamental analysis. There's strategy.
This
isn't the monkey at the,
with the dart?
The dartboard. But listen, we know this, right? We talk to many people, really smart people, and different strategies. And it's safe to say that different investment strategies will end up ultimately playing out in this kind of crazy time. All right, Charlie Pellet, thank you so much. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P retreating from yesterday's records. NASDAQ is advancing. S&P paring losses, now trading little changed after closing at a record. Dow Jones Industrial Average back below 30,000. Tech-heavy NASDAQ edging higher right now. NASDAQ up 68. In fact, pushing higher to a record up by about 0.6%. Possible record there. S&P down 4, down 0.1%. The Dow lower by 173, down by 0.6%. 10-year yield 0.87%. Gold down 81 cents the ounce now at 18.06. And West Texas Intermediate crude up 1.8%, 45.72 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed. We're just about a little bit under 12 minutes away from the closing bell, wrapping up at least the first 3 days of trading in this holiday shortened trading week. Of course, we come back on Friday for a shortened day as well. In the meantime, let's check out the trade. Back with us is Sean Cruz, Manager of Trader Strategy at TD Ameritrade. He joins us on the phone in Florida. Sean, nice to have you here. Just looking at some of the notes you shared with us, you say the elevator ride takes a pause this morning, but it's still been an impressive week. It really has been, hasn't it?
It has, and what I thought was interesting, I went and looked at some of the volumes we were seeing, and there was actually some pretty decent volumes we were seeing behind these moves, and I think that shows that there actually maybe is a little bit more staying power to some of the gains that we have seen. Because I think that's what everyone's really asking themselves: is this move higher? Is this something that we should expect to be able to maintain, or maybe should I be dialing back exposure just in case things do turn around rather quickly? And they say markets can kind of go up an elevator, but they go down off a cliff. I think that's what everyone's asking themselves. But looking at the volumes, I think this move seems sustainable, at least for the time being.
Why?
I think the big thing is really markets are looking ahead, and I really think the news that Janet Yellen is being considered or is considered a frontrunner for the nomination for Treasury Secretary really gives, I think, a lot of optimism to markets, because the assumption also alongside that is that you're not going to see Powell go anywhere. And now you're going to have Janet Yellen, who I think certainly in the past has been a vocal proponent of strong fiscal stimulus from Congress. So we will have Powell, who we got from the minutes today, we know that it is going to remain accommodative, they say, into the future, and they're willing to actually step up and do more on the asset purchase side. And that's something they've all been calling for. And now it looks like you're also going to have a big proponent of accommodative policy on the fiscal side as well.
Well, and when you look at things, listen, when you invest in the market, there are people who play it short term, there are people who play it long term. And I do think about when we get on the other side of COVID, do we hopefully have the policies in place to create a much more sustainable, enduring economy, not one that is just beneficial to Wall Street, but to the broader economy, which ultimately means a more prosperous economy for everyone?
I think so, and I think the thing that I find really interesting with the nomination of Janet Yellen is you've heard Powell talk about wanting to really focus on more inclusiveness, especially in terms of jobs gains. And Janet Yellen certainly echoed that sentiment. And I think people need to keep in mind her background, her bread and butter, so to speak, is really as a labor economist. So she is very, very strong when it comes to labor economics. And as we come out of this recovery, what sort of jobs growth we're getting, does that translate into well-paying jobs with strong wages? And is it going to be more inclusive across the board? I think having a labor economist in the as a Secretary of Treasury. And then you also have Powell, who's also indicated he wants to make sure that's a focus of the Fed moving forward. Sort of gives you a little bit more faith that may actually be the experience of this recovery when we do get to the other side of this.
You know, Sean, we just did a story, Charlie Pellet and I, that basically talked about when, a lot of the global fund managers, they, see an end to the pandemic, but they differ in terms of strategy on how to play it. And there's a lot of discussions about market rotation, right? And depending on the day, we see market rotation, whether it's into some of the value names, whether it's continuation finally with small caps. And then all of a sudden tech comes roaring back and it's like, wait a minute. Okay, so much for market rotation. So I don't know, do you have a strategy, that you are kind of thinking about when it comes to the COVID recovery and what it will be? Or is it something for a few months now and then something else for 2021?
Well, I think the first thing everyone was asking themselves was, are we going to see a true rotation in the sense of you are going to see money flowing out of some of those high-flying tech stocks that have done so well this year, come out of sort of that pile and go into some of the more cyclical or small caps, and a lot more of the just value-oriented plays right now. And I think what we've learned over the past couple of weeks, there was an initial reaction when Pfizer announced their vaccine where you sort of saw that play out on the screen. You saw the NASDAQ actually get hit, but a lot of the cyclical sectors and the indices that really have a strong weighting to some of those more cyclical type names actually did really well. I think markets sort of reassess that, and the sense I'm getting now is, look, we're going to hold on to some of these tech names. We think they really have made some pretty strong progress in user growth, getting people on their platform this year. But we're also seeing some attractive valuations in the cyclical sector. So it really looks like equities are more generally favored. And you're asking yourself, where's the money going to come from? If you just really look at any gauge of sort of sideline cash, and that could be in looking at money markets, look at savings rates in depository institutions, all of those are incredibly high right now. So I think that's where you're going to see the money flow from. It's going to come out of being really, truly on the sidelines in markets and savings accounts. But I also think some of what you've seen, just the strong demand flowing into Treasury that's pushed yields so low, I think you're actually going to see that also reverse a little bit. And when you start to think of what that means for interest rates and yields, it can favor certain areas like banks, but also there are some interest rate sensitive areas of the economy and the market, thinking housing, automotive, that maybe are going to be on the other side of that coin. But generally across the board, I think it favors equities.
What's the story we need to keep a watch on? What's the thing that could be, kind of turn us upside down again here? Is it rising virus numbers, everything taking just a little bit longer than we anticipate? What is it in your view?
I think it's everything taking a little bit longer than we anticipate. So I'm really focused on what sort of a fiscal cliff households are going to experience if we aren't able to extend some benefits, if banks aren't able to maybe renegotiate some of these loans or some of the debts that are owed out there. You could see a pretty pronounced fiscal cliff coming here towards the end of the year. And I think that's really going to be something that shapes the recovery, is what sort of a platform are we lifting off from? And if we don't get, I think, at least some sort of extension, if not another round of stimulus, we may be coming from a little bit more of a weak point than we would like to be when we do try and fire up the economy again. And that could also really determine the recovery we get. So that's really what I'm watching, the fiscal cliff at the end of the year.
And we know rolling that rock back up the hill is not easy. That's for sure.
Yeah.
Sean, thank you so much. Have a good and safe holiday. Happy Thanksgiving. Sean Cruz, he is Manager of Trader Strategy at TD Ameritrade, joining us on the phone from Chicago on this Wednesday. So just got about 3.5 minutes left in today's trading session. Right now, we're bouncing around a little bit. We're definitely off our highs of the day. S&P just down about 6 points. Dow up, it is down about 175 points, down 0.6%. And the NASDAQ actually eking out a gain of about 0.4%, up by 53. So again, we continue to see the NASDAQ really the outperformer and outlier when it comes to the trade. You're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange, and it is on to the Thanksgiving dinner table. Folks from Granite Shares ETFs ringing that closing bell, with the Dow, the S&P retreating from records, NASDAQ scoring a record today. The Dow down 173 points, a drop there of just about 0.6%. S&P pulling back by 5, down 0.2%, but NASDAQ up 57 points to 12,094. That was a gain today of 0.5%. The NASDAQ 100 index up 0.6%, a retreat for the Russell 2000, lower today by 0.5%. So what's behind this week's gains for stocks? Indeed, the previous week as well. Sean Cruz is senior market strategist at TD Ameritrade. He was our guest moments ago right here on Bloomberg Business Week.
I think the big thing is really markets are looking ahead, and I really think the news that Janet Yellen is being considered, or is considered a frontrunner for the nomination for Treasury Secretary, really gives, I think, a lot of optimism to markets, because the assumption also alongside that is that you're not going to see Powell go anywhere. And now you're going to have Janet Yellen, who I think certainly in the past has been a vocal proponent of strong fiscal stimulus from Congress.
10-year yield, 0.87%. Gold, lower, little change, down $1, down less than 0.1%, 18.06 the ounce. West Texas Intermediate crude down 2%, 45.80 a barrel. Slack Technology shares rallied today after a report said it has held talks to be acquired by Salesforce.com, both companies based in San Francisco. The report initially from the Wall Street Journal. We saw shares today of Slack surging 37.6%. Salesforce.com lower by 5.4%. Another San Francisco company making big news today. Gap out with third quarter sales that exceeded estimates. E-commerce jump, but weakness persisted at Gap and Banana Republic. Shares plunged. Gap today down 19.6%. S&P down 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over. Bloomberg Business Week. Movers and shakers.
Shaken, not stirring.
On Bloomberg Radio.
Yes, indeed. Time to take a little bit of a deeper dive into today's trade. I'm Carol Masser right here on Bloomberg Radio, along with Bloomberg News global macro strategist Vince Signorella. Let me just give a little bit more context onto what Charlie Pellet just said. As for the S&P 500, 152 names in the index higher today, 352 lower, 2 unchanged. If I take a look at the major industry groups in the S&P 500 and how they traded today, there are 11 of them. We saw 4 higher, top of the pack consumer discretionary up about 0.6%. Bottom of the pack was energy. Energy's either at the top or at the bottom. That's been the trade today, or really this year, I should say. Energy down about 2.5%. All right, Vince. So what do you make? NASDAQ at another record. The S&P and Dow hit records yesterday. I don't know. I'm not sure how we think about this. I know we talked about it yesterday.
Yeah, I think we are seeing a little bit of the profit taking we talked about yesterday going into a long weekend for most. Not for me, unfortunately, but for most. And I think, as we said yesterday, it's pigs get slaughtered. It makes a great deal of sense to take some off the table going into this weekend. It's unlikely next Monday we'll have another sort of virus lift, if you will. I think we've gotten as much as we're going to get out of that for a while.
I do feel like traders have wisened up to it a little bit too, right? That understanding, this is good news, right?
Yeah, actually, I did a quick post the other day about the law of diminishing returns. Yeah. The first virus announcement saw a 74-point gap open for the S&P, and the last one was 10. Yeah. So, right now it's kind of become a little Missouri, show me the vaccine and stop telling me about it. And I think that's what we're going to need going forward. But as one trader pointed out to me today, and all the excitement over the Fed, is all the bond buying in the world is not going to reduce food lines. And, if there is no stimulus renewal, if the CARE Act isn't renewed after the day after Christmas, we're looking at a long, ugly winter.
Yeah. Well, which is what President-elect Joe Biden, that's exactly what he said in terms of get ready for a pretty difficult winter. And I don't know, I'm sure you've seen it, Vince. I know I've seen it multiple times, watching some of the evening news shows, and just the pictures of the food lines around the country of people who have nowhere else to go in order to put food on their table.
I was watching on the news last night. I believe it was Dallas, if I recall. And it was, it was heartbreaking. I mean, the line just seemed to go on forever and ever and ever. And I know the president-elect gets it. He's talked about wanting to extend the CARES Act, but it looks like from what I'm hearing is that Schumer and Pelosi are still heels dug in, if you will, for the big deal. And if the Senate stays Republican, I just don't see McConnell going for that.
So what's the market chatter on that, Vince? I mean, is there a downside if we do too much aid and overdo it and don't really need it? Because there's certainly a downside if we don't do enough.
Yeah, I don't think the market sees a downside if we do too much. I know people are gonna say, look, we're blowing the deficit out of the water. I mean, that's going to happen one way or the other. I think with the Democratic president, Democratic Congress, they're going to want to do aid. Schumer and Warren are talking about forgiving $50,000 worth of student debt for individuals. Now, they don't. I read through the statement. I didn't see an actual plan of how it was going to get paid for. I'm sure there are limits on income that go with that as well. But at the end of the day, how do you pay for that? Do you raise taxes, or do you tell the banks, you're just eating the bad, you're just eating loans? Either way, it's really not good for the economy, and it probably isn't really good for the stock market as well. So, go big or go home, or I guess the market's just not going to like it the other way around, I don't think.
Yeah, well, it's interesting too, and we've heard certainly from Jay Powell and the Fed that they're comfortable running. We've certainly heard this about inflation, running it maybe a little bit hot if it means we make sure we don't fall back again. And I do wonder if Congress has gotten the memo on that.
I think they have. I don't think that's. I don't think it's inflation. That's the
well,
issue.
It's not. I don't mean it like that, but you know what I mean. Like the idea of kind of overdoing it. I do.
Well,
I don't.
That's the feeling in the Senate.
Yeah,
that's definitely the feeling in the Senate. They're stuck on the idea that they're bailing out blue states who have run up high pensions and internal deficits. But I think somebody, a trader friend of mine came up with a really good idea. He said, just give X amount of money away to everybody. Yeah. And then come tax time, if you make over a certain amount, you got to pay it back. Mm-hmm. And if you get the check and you're going to make over the certain amount, you're not going to spend it because you're going to have to return it. Right. And so at least you get enough money into the hands of people who really need it. And who will, they'll spend it, they'll use it, they need it now. They need it to live. Right. This dancing around who should get it, who should not get it, we're spending too much, too little, is silly when people are on the lines that we just spoke about. I mean, it's inhuman.
Well, and I do wonder too, just to kind of wind up a little bit, Vince, is that you're talking to traders, you're talking to Wall Street, and you and I have talked a lot about the disconnect, and we are again here about between Wall Street and Main Street. Does Wall Street get it? Like, is there some sympathy in terms of what's going on, on Main Street and for many Americans?
Yeah, Wall Street does get it, actually, and I think the dichotomy on Wall Street is actually, I did a post on this today, is the difference between the human traders and the machines. Algos don't get it, and with all due respect to the folks who program algos, they're pretty wealthy quant guys who are compensated, and when you're in that space and you're working and you're getting paid really well, you just don't feel what the average person feels. And I know this from personal experience. The more successful I became as a trader, the less attuned I was to what was really going on the streets of the market. And I had to pull myself back to remind myself where I was from to get back into a really profitable trading situation where I was really feeling the pulse of the economy. The algos don't sense that. They're not programmed that way, and they just react after the fact, and they just don't care. They're models. They just don't care.
Right. They just go based on the math and the models. You've got such a good heart, Vince. Thank you so much. Have a wonderful, wonderful Thanksgiving, and looking forward to talking to you either on Friday or next week. Bloomberg News global macro strategist Vince Signorella joining us on the phone from White Plains. Just a reminder, everyone, how stocks closed on this Wednesday. You did see the Dow Jones Industrial Average off almost 174 points, S&P down about 6, NASDAQ, though, other direction, up about 57 points. And this, as a headline crosses, President Trump pardoning his former national security advisor. We're talking about Michael Flynn. All right, let's get to World and National News. Let's get to Ed Baxter in San Francisco. Hi, Ed.
Hi there. How are you? Yesterday was Turkey. Today, whom? The The tale of the president and president-elect in the last hour. Donald Trump by phone to a handful of Pennsylvania legislators, giving us a look into how he is still dealing with this.
This election has to be turned around because we won Pennsylvania by a lot, and we won all of these swing states by a lot.
Now, he didn't say on what he bases that, and those states have been certified for Biden. The president-elect, with Thanksgiving wishes for all citizens of the U.S., says we are at war with the virus and not each other, to be kind, and urging small gatherings tomorrow.
For those who've lost a loved one, I know that this time of year can be especially difficult. Believe me, I know.
He says we are all in this together, and the sentiment for small gatherings echoed, well, in a little more animated way by the governor of New York.
I really don't care about your politics, and you don't care about mine. I care about your health. I care about if we're overwhelming our hospital system. I care about how many people die. That's what I care about.
Yeah, Andrew Cuomo, of course. Meanwhile, the formal Biden transition briefings begin on Monday, but Jen Psaki, the transition advisor, says they have already been talking.
We do not feel that it is necessary for a President-elect Biden to speak with President Trump in order to get that information. We believe that we've been getting the information that our teams need.
And Anthony Fauci, Dr. Fauci, saying today, confirming that he has also been in touch with the transition teams. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. Carol Masser, along with Charlie Pellett. I want to talk about EPS in just a minute and also Amazon, because there's a lot of stories across the Bloomberg, but I do think we need to rehash, Charlie. President Trump announcing a pardon for his former National Security Advisor, Michael Flynn. You might recall Flynn twice pled guilty to lying to FBI agents examining his ties to Russia, then moved to withdraw his plea. So keep in mind that we may see some more pardons coming our way.
Indeed. Certainly a developing story, one that we're keeping an eye on. And I'd like to switch gears, talk about another story that a lot of people are following. And that is, yes, we've got Black Friday coming up. We've got Cyber Monday coming up. The focus is on delivery. Focus is on getting the products from warehouses to under the Christmas tree. And Amazon merchants around the U.S. say some products that normally reach customers in 1 or 2 days are now taking a week or longer, just as the world's largest online retailer heads into what's expected to be a record-breaking holiday shopping season.
Say what?
Yeah, it may not be here in time, taking longer than people think.
Listen, we've all gotten spoiled, especially if you're a Prime, an Amazon Prime. Like, you order it, you get it the next day. Some places you get it the same day. It's like unbelievable. But there have been incredible warnings. I think there's expectations that because of the global pandemic, the health pandemic here in the United States, that people are going to be doing all of their holiday shopping, or a large part of it, online, in addition to just the basic necessities that you increasingly need, especially as those COVID cases go up. And that is going to tax our system once again.
Speaking of which, I don't know if you saw the other story today involving FedEx, UPS. They can't get enough vans to start moving stuff around.
That's pretty wild. Exactly. And so they say it's resulting in a cost squeeze that's cutting into profits, storing a record surge in package volumes. I am fascinated to see how this all plays out over the holiday season, Charlie, and ultimately what it's going to mean for these companies in terms of, operationally as well as financially.
Stay tuned, as they say, because this is a fascinating story.
All right, and certainly we'll get more as we get closer to Christmas. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, repeating our top story. Developing story this afternoon, President Trump says he has pardoned Michael Flynn, his first national security advisor, who has pled guilty to lying to FBI agents about his conversation with the Russian ambassador to the United States. The president making the announcement on Twitter today. The pardon brings to an apparent close a long and bitterly fought criminal case that became a cause célèbre for the president and his conservative allies, who portrayed the prosecution of Flynn as evidence of a broad conspiracy against the president. The Dow, the S&P retreating from records, NASDAQ climbing to a record, NASDAQ up 57 points, now at 12,094, up by 0.5%. S&P down 5, a drop of 0.2%. The Dow down 173, lower by 0.6%. A retreat today for the Russell 2000 index, down 0.5%. NASDAQ 100 index up today by 0.6%. 10-year yield 0.88%. Gold down 0.1%, 18.05 the ounce. West Texas Intermediate crude rallied 2%, 45.81 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, thanks so much, Charlie. So if you had $1 million worth of Slack shares today, or at least at the close of yesterday, they're now worth $1.4 million. So yeah, this story caught our attention. Salesforce apparently interested in buying Slack. Let's talk about this story. Slack shares were up 37% today. Salesforce down about 5.5%. Anurag Rana is senior analyst of software and IT services at Bloomberg on the phone from Chicago. Anurag, nice to have you here. This crossed the Bloomberg earlier today, and we're like, whoa, what's going on here? Was this a bit of a surprise?
It was a bit of a surprise, frankly, because, so far software valuations have been through the roof. So, nobody was expecting a large deal at this point. So, yes, it was a bit of a surprise.
Okay, but it's not a done deal at this point. It's one of those considering buying Slack, according to those in the know. First of all, from a strategy sense, from a financial sense, would it make sense?
It always made sense from a strategy point of view because, Slack's been losing some market share from Microsoft, and this would give Salesforce an entry into a very lucrative and a very important market. But what it makes, in our view, most sense financially is if Salesforce decides to pay for this thing using stock and not cash. And that's because Salesforce's own valuation has gone up quite a bit over the last 6 months. And, they have very good currency that they can pay with. And that's, I think, if it's done through stock, to us, and I believe to investors also, would make a lot more sense.
All right. So, as you say, strategy, it makes sense. Check. Financially, if they do it as a stock deal, it makes sense. What's the likelihood, you think, that it happens, or could somebody else come in? Is there another person that might be, another company out there that might be interested in Slack right now and is watching this very closely?
It's very tough, largely because, we have to discount all the big players anyway. So that's, none of the big players, that we know about, the largest top 5 companies cannot buy anything without the regulators looking down them with a microscope. The one odd buyer that could come out of the blue could be Zoom, largely because they also have a very strong currency right now, and they could really, partnered with Slack, give a big fight to Microsoft and almost every other legacy product that's out there.
Yeah, let's not forget Zoom, right, which is up 552% this year, is now $126 billion market cap, which is pretty remarkable. All right, so is there a timeline here? I know that Salesforce has their annual Dreamforce conference next week. So could we potentially, if they're going to do something, they're going to get out ahead of this? Or could they use that event to make the announcement? What are you thinking?
It's possible. This is the deal coming out on Thanksgiving Eve was a bit of a odd thing. People, things usually calm down right now.
Yeah.
And the timing, not so much about the next week or, the Dreamforce, but, to us, timing could also be a more factor of that software valuations have started to come down in the recent days because people are now rotating out of the safety stocks and moving more into the economic sensitive stocks that are more sensitive to a vaccine. So that could be another reason that Salesforce could use its currency before potentially we could see a compression of multiples in the high-flying tech names.
Anurag, you probably saw this right through on the Bloomberg, our own team covering, the expectation or potential, I shouldn't say expectation, but potential of this deal happening. And there's an analyst over at Evercore ISI said that Salesforce shares were down because this was, quote, not the right target, not the right time, and says some strategic rationale. But they say they think investors will view this deal as a reach in order to buy some growth. But isn't that kind of buying things for growth? Isn't that somewhat part of Mark Benioff of Salesforce, part of his strategy? I mean, he's very acquisitive.
I was going to say that. He's been doing that for 10 years. So why are you surprised now? I mean, at the end of the day, you want to see that they want to get into one of the hottest markets in software, that's chat collaboration between. So imagine this. Salesforce sells software to salespeople to be more productive. Imagine along with that, they have this wonderful app that allows you to be productive between salespeople, between their clients. Same thing for customer service. Chat collaboration is the next area of customer service. Yeah. Like it or not, a lot of people, younger people, do not like to call in and try to figure things out. So, if this is the way business is conducted going forward, there are only two players in town. One is Slack, and the other one is Microsoft Teams, really from chat collaboration point of view. Yeah. So if Mark Benioff wants to beat Microsoft, what better way to do it than buying Slack? So I'm not so sure if it's not the timing is always a question, frankly, because of the valuations of the software.
Right.
But Salesforce valuation is itself also up, so it's not as if there is currency to be played with.
I think that's brilliant, too, what you said about chat collaboration. We've certainly seen it just even on the retail, side of selling from not, B2B or anything, but B2C, jewelry stores where they now go online and can have, a face-to-face chat with a, possible customer because those customers can't get to the store, and they talk about that changing certainly the retail environment. But you could see this chat collab happening among businesses, right? That this will be one of those kind of lasting trends of the pandemic. Just got about 20 seconds, Anurag.
No, I completely agree. This is an irreversible trend, and we don't see that changing anytime soon. If anything, Mark Benioff has done deals better than anybody in software. Yeah. So if this happens, I would respect his decision.
All right. Have a good Thanksgiving, Anurag Rana of our BI team. For those of you listening in New York and San Francisco, watching on YouTube, Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli. That's next.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. I'm Carol Masser. It's 4:31 on Wall Street, Thanksgiving Eve, as I've been liking to call it. Coming up, we're going to get the results of a new survey of entrepreneurs specifically, and talking about funding needs specifically and what they've been up to. So we'll get to that in just a moment. First up, though, let's get another check on your top business stories. Here is Charlie Pellet.
Hi, thank you very much. Record for NASDAQ ahead of Thanksgiving here. We've got the S&P NASDAQ retreating from records. The rotation out of tech shares and into cyclicals, sparked by promising vaccine news, reversed today as investors cast a wary eye on the batch of data that suggests a possible slowdown in economic growth. S&P 500 index retreating from that record. The Dow falling back below 30,000. Tech-heavy NASDAQ indexes edging higher. Let's begin with the NASDAQ Composite Index up 57, up 0.5%. NASDAQ 100 index up 0.6%. S&P down 5, a drop of 0.2%. Really little changed on the S&P after the record. The Dow down 173, lower by 0.6%. 10-year yield 0.88%. Now, what about the economic outlook? Sarah Hunt is portfolio manager at Alpine Woods Capital Investors, and she was interviewed this morning on Bloomberg Television.
I mean, it's interesting because when we saw all this start to happen in March and in April, everyone sort of assumed that by September we'd be back to school and things would be a little bit more back to normal. Now it sounds like the extrapolation is going on a lot further. So we've written off 2020, and I've even heard people start looking at saying, well, you know, the back half of 2021 is going to be better than the front half because we're going to be going through the winter and things are still going to be closed down. So then you start looking at 2022.
Gold lower today by 0.1%, 18.06 the ounce. West Texas Intermediate crude up almost 2% today, up 88 cents a barrel, 45.79. Bank of America's leaders planning year-end bonuses that break with Wall Street traders' hopes for hefty raises after a record-setting run. Shares of Bank of America up today by 0.2%. Amazon merchants around the country say some products that normally reach customers in 1 or 2 days now taking a week or longer, just as the world's largest online retailer heads into what's expected to be a record-breaking holiday shopping season. Amazon shares up today by 2.1%. Recapping stocks mix, the Dow, the S&P lower, NASDAQ higher at a record, S&P down 5, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, got it. Thank you so much. So earlier this week, we talked about the venture capital scene. In fact, yesterday, Susan Line, former president of ABC Entertainment, she's founder of BBG Ventures. We talked about the early slowdown in VC because of COVID, and then how things have moved along and picked up as a result, as kind of innovative and disruptive trends have really picked up some momentum as a result. So let's talk a little bit more about the startup and funding world. Greg Greifeld is managing director, head of credit at Runway Growth Capital. They provide financing for late-stage growth companies. And yes, if his name sounds familiar, his dad, of course, Bob Greifeld, former head of NASDAQ, and his sister is Katie Greifeld, who covers cross assets for us here at Bloomberg News. I feel like I'm at Thanksgiving dinner.
Yeah, thanks, Carol. Thanks for having me.
I can only imagine.
My sister only had great things to say about you.
Oh, well.
Excited to be speaking.
Well, we're delighted to have you here because this is, I think, an interesting world, and we love covering kind of the startup world and the funding world there. So tell me a little bit about this study you guys did. It was U.S.-based entrepreneurs, but tell us about it, what you were hoping to get at, and some of the key findings.
Yeah, this study really was done in order to fill a gap in the market in terms of data. There's been a lot out there in terms of venture equity, but this is the first survey of its kind, speaking to both entrepreneurs as well as venture providers for their perception of the venture debt market.
And what did it kind of show us about how they see it at this point?
The most interesting thing to me personally is that 43% of entrepreneurs look at debt really as a last resort when they can't find adequate equity funding. Mm-hmm. I really believe that with enough education, they'll come to see that this is a way to turbocharge growth, increase their runway, and really augment a successful business in lieu of or in addition to equity, rather than when equity is unavailable.
Well, how much of it, though, Greg, is it tougher for entrepreneurs to maybe tap into the debt markets? Is it a little bit more trickier?
I think that the market has grown a lot over the last few years. You're seeing a lot more providers out there. And thinking about the bank market, where typically that funding is tied to a equity round, we're now seeing through the growth of non-bank lenders such as ourselves, a increasing pool of capital available either in between or in addition to these equity rounds. So there's definitely significantly more opportunities for founders to raise debt.
So where's the disconnect, right? Because you guys are obviously out there, right? And you're talking with entrepreneurs. You're out there and saying, okay, this is an opportunity for you guys to tap into, you know, some liquidity basically, or help out your business. So where's the disconnect that entrepreneurs aren't really tapping more into the debt markets?
Yeah, I think a disconnect is that a lot of entrepreneurs seem to think about debt like a mortgage and look at their balance sheets and aren't sure that there's enough assets for them really to get debt against. A firm like ourselves, we lend against enterprise value, where these companies that have been around for a significant amount of time are generating a material amount of typically recurring contractual revenue, have built an asset there which they're able to use to ultimately leverage and access debt capital.
Well, it's interesting, you know, and I, you know, to be fair, I don't think we talk about venture debt certainly as we do, you know, other funding needs. What's the advantage, at least in your view? And I know you're going to be talking your book a little bit, but what do you see as the advantage over an equity play?
Yeah, definitely. And, you know, to ultimately talk our book, there's a phrase in the venture world in terms of runway, which is the amount of cash liquidity a company has. And we, in a tongue-in-cheek manner, are named Runway, since our goal really is to help companies increase their runway. And I think the main advantage is that its ability to access capital to grow, to ultimately achieve milestones and higher valuations, while delaying the dilution that's associated with an equity raise.
Right, exactly. And that's something to, you know, think about in terms of, you know, if you're an entrepreneur, an owner, if you're thinking about kind of how equity versus debt impacts that, that is certainly a very significant difference. Hey, listen, Greg, hang on for a second. I got to do a little bit of world and national news, but then we'll come back and continue talking about it. And I am curious, too, about some of the trends, the other trends that we're seeing when it comes to venture, whether it's SPACs out there, also the election outcome, maybe how that's impacting the world, too, as we move forward. You're listening to Bloomberg Business Week. We're going to get back to Greg Greifeld. He's Managing Director, Head of Credit at Runway Growth Capital, and joining us from kind of just around the corner from me here in Jersey City. You're listening to Bloomberg Business Week. When we come back to a little bit later on at the top of the hour, we're going to check in with Scott Galloway over at NYU. He's got a new book out, really thinking about this time, this impact of the virus and how it leads to disruption, innovation. How do we get to maybe a better way on so many things that kind of ail our society? So we'll talk to Scott a little bit later on. You're listening to Bloomberg Business Week. Back to World and National News and back to Ed Baxter in San Francisco. Hey, Ed.
Hey, Carol. President Donald Trump has pardoned his former National Security Advisor, Michael Flynn. Flynn pled guilty to multiple charges of lying to the FBI regarding dealings with Russian interests. And some response coming in, Representative Adam Schiff has tweeted, quote, Donald Trump has repeatedly abused the pardon power to reward friends and protect those who covered up for him. It is no surprise that Trump would go out as he came in, crooked to the end. Mr. Trump is continuing his road to discrediting the election today in front of a group of Pennsylvania lawmakers, Republicans.
It's very interesting to see what's going on, and this was an election that we won easily. We won it by a lot. A big energy.
And he continues to make those claims about all the swing states with no basis of truth. Meanwhile, President-elect Biden today says his Thanksgiving wish and a reminder the country is at war with the virus, not with each other.
This is the moment where we need to steel our spines, redouble our efforts, and recommit ourselves to the fight. Let's remember, we're all in this together.
And he is championing smaller gatherings tomorrow so that all can be together again at one table next year. Dr. Anthony Fauci is saying the same thing.
This is the moment where we need to steel our spines.
Excuse me. Sorry, sir.
We know for sure that people who are without symptoms, innocently, with no malintention at all, goes to a party or goes to a gathering, gets together indoor. You let your guard down. You obviously have to take a mask off if you're eating or drinking. Try to avoid that as much as possible.
I guess the message is out there loudly and clearly. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Masser. Joining me once again, Charlie Pellet. Couple stories, a little bit of a hodgepodge, and I'm doing a little bit of an audible here, Charlie. Your number one story on the Bloomberg right now as we speak in the last hour, professional poker player Danielle Negreanu, I think it is, tweeting today that someone stole $15,000 from his Venmo account and then tried to take a bit more money for an Uber ride. So he tweeted, "Hey, you just stole $15,000, dude, and you still need to get me for $43 more." He, of course, has won more than $42 million as a poker player, but it is kind of fascinating to see this.
Unbelievable. And I don't know how this guy manages to fight back other than putting it out on Twitter. I mean, it's, it's so frustrating. I've been wronged on social media. I've got my own battle. It's not even a battle. They don't even email me back. Listen, I don't want to mix my professional world with my personal world, but it's a social media issue. So we'll leave it at that.
Okay, we'll leave it at that. The other story I want to get to that I really feel like is a sign of the times. Our Ola Karif and team wrote this out on the Bloomberg about, you look at the city, right? And we talk about what's been shut down. We know restaurants. We've talked about that a lot. The hospitality industry is shut down. But we've also seen, as a result of people not going to work in the city, all those peripheral businesses, right? We're not running out to get maybe our shoes repaired. We're not dropping dry cleaning. I mean, there's a lot of stuff going on.
I don't know about you when you're working from home.
What?
I dress like a bum. It's like I'm wearing ratty pants, I'm wearing ratty shirts.
Showering, Charlie Pellet? Just tell us how bad this
right,
is.
Exactly. But the point is, I like wearing suits. I like wearing ties. I like showing up to work looking like I'm dressed for where I'm going, not for where I've been. And, the bottom line is I miss my dry cleaner in Brooklyn, and I haven't been there in 7 months.
Yeah,
it hurts.
You and me too. I haven't either. And so this story basically gets into it and says 1 in 6 dry cleaning companies and dry cleaners have closed or gone bankrupt already. Many more will not survive without another round of stimulus. It's small business, folks. It's something we've been talking about a lot. Charlie Pellet, thank you so much. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Record for NASDAQ, a retreat for both the Dow and the S&P. The Dow Jones Industrial Average back below 30,000. Tech-heavy NASDAQ indexes edging higher. Volume dwindled into the closing bell as traders headed out for tomorrow's holiday that will keep markets closed in the U.S. S&P down 5 at 36.29, a drop there of 0.2%. The Dow down 173, lower by 0.6%. And NASDAQ at a record, as I mentioned, up 57, a gain there of 0.5%. 10-year yield 0.87%. Gold down 0.1%, 18.06 the ounce. West Texas Intermediate crude up 2.1%, 45.85 a barrel. Friday holiday shortened session recapping today. S&P down from a record, lower by 5, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. Want to get back to our guest. We're talking with Greg Greifeld. He's Managing Director, Head of Credit at Runway Growth Capital, which provides financing for late-stage growth companies. So, Greg, listen, when we think about investing in startups, either at the beginning or certainly multiple and later stage rounds, it is often an equity play. So who are the ideal companies for the ideal startups that could certainly tap into venture debt? Because, there are consequences, right? If you don't pay it back, that could be complicated for the business, right? And they might need to sell if they've got to pay back that debt. So who are the ideal startups that can tap into it? Is it really late stage who just are in a great growth phase and just all of a sudden need a quick cash infusion and they don't want to give up any more equity?
I think you highlight a great point, which debt is a very powerful tool, but only in the hands of the companies that really have reached the point in which it is a safe play. I like to think about it as debt works perfectly to fuel defined growth. When you are in the product development stage for a software company or a technology hardware company, you don't necessarily have a line of sight in terms of the amount of time or the amount of money that it's going to take to fully develop your product. Once you have that defined product, though, and you're really funding that go-to-market strategy and that expansion, that's where debt from a firm like ours comes into play,
right,
and helps this company get to the next stage.
And really, you got to think about it as in terms of short-term financing, right? Is that fair?
I think that it depends a lot with that in terms of the partner that you pick to provide your debt.
Okay.
At Runway, we really strive to be partners with these firms and not a short-term financing partner. We look to be able to find firms that have caught lightning in a bottle, are on that growth trajectory, and in a perfect world, we would be able to grow our loan facility with them.
Mm-hmm. What's a typical cost on venture debt right now? And I'm sure there's a range, but I'm just curious, is there kind of a number that's kind of floating around right now?
It definitely varies significantly company by company and stage by stage. But I would say that you could be expecting to pay high single digits or low single digits in terms of interest rate.
And what kind of activity are you guys seeing? Take a step back for me, Greg. I like to do this with a lot of our guests that come on. What has your world been like when it comes to venture debt and what you're seeing with some of the startups that are out there right now? What's it been like since April when everything shut down, March and April when everything shut down, and what's changed in your world? I talked about, in the lead-in, catching up with Susan Line yesterday, and she said, back in March and April, everything in the VC world shut down, and your investments, you quickly were looking at them, looking to see who needed to be shored up and making sure things were okay, that you can make sure your businesses and your investments could get by. It's a little bit different, she says. It's evolved, and we've started to see trends, and the markets kind of open up again when it comes to the VC world. What was your world like, and how has it changed?
Yeah, it's definitely been a roller coaster, not just for ourselves, but for the country and the world as a whole. Right. I would agree with her sentiment that in April and early May, it really was a question of survival for a lot of these companies, where there was a significant reckoning in terms of their cost structures, realizing that the near-term growth opportunities they had expected and built their budgets around were no longer necessarily in the cards. And additionally, when you look at the equity providers, which as lenders we think of as a potential